Good morning, this is Mayor Valensky with Driving Markets. So let's look at what happened yesterday between Wednesday night when the market shot up after the Fed, the FOMC, raised interest rates by 75 basis points. The market shot up, and then yesterday it absolutely tanked. It was hammered. Between Wednesday and Thursday, the Dow dropped more than 1,000 points. In fact, I put on YouTube and Twitter and Instagram, they can expect 1,000-point fall on the Dow, and it was more or less there. But between Wednesday and Thursday, it did drop 1,000 points, and all of this is on the back of the fear of recession. Now, why would there be a fear of recession? Simply because the investors, the banks, and the traders are concerned that the Fed, the central bank in the States, is going to be aggressive in tackling inflation. And that word aggressive means that they're going to be increasing interest rates at a much higher and faster pace than first anticipated. If we backtrack and go back to where we were in January, February, everyone was talking about they might do a 1% overall increase throughout the year. And I, at the time, said that is a load of absolute trash. That's not going to happen. Rates are going to rise by about 3.5% to 4.5%. And I'm still sticking to that. If you look at the end of the year rates, I reckon rates will be between 3.5% and 4.5% and maybe 5% by the year end. One of the viewers said to me yesterday when I said that the Dow's going to go down to 20,000, he told me to start taking my pills, start going to see the doctor. There's no way the Dow's going to go down to 20,000. Well, again, that's my opinion based on experience, knowledge, feel, where we're out in the market, taking all the economic indicators. It looks like the Dow is going to go down to 20,000. Just like I said, when the Bitcoin is going to go down from 68 all the way down to 32, no one believed me. Which is fine. I'm not asking everyone to believe me. It's absolutely fine. Having a second opinion is great, and having your opinion is absolutely terrific, because the market runs on two-way traffic, which is what we build the whole financial markets on. But this is all my opinion, and it could go either way. You're right. It could happen whereby the central banks will pump in another $4.5 trillion into financial markets. The central banks could stop raising interest rates and lower interest rates. We'll have inflation of 30%, and Dracula will donate to the blood bank. That all could happen. You're absolutely right. But you've got to look at the trend. And because the stimulus is stopped, and because there's now a contraction of liquidity whereby there's less money floating around, then the likelihood is, in my opinion, that the trend will continue down. And you can make money on a downtrend. You can go short of markets. You don't always have to look at what can I buy. When you trade, you can trade long, which is the markets to go up, and you can trade down short for the markets to go down. And remember, the markets are bouncing around on a daily basis. So there is money to be made. It's tough, but there's money to be made. Let's look at where some of the action is. So Apple has dropped below the 2 trillion, going to drop below the 2 trillion valuation. And what that's going to mean, in my opinion, is that Apple is looking very vulnerable as a share. What happened to Apple? So Apple benefited enormously from the stimulus package. If you look at the stimulus package from March 2020, the COVID package that the central banks pumped into the economy, and then you look at the graph of Apple, there is a synergy there between the two. So Apple benefit from this huge amount of stimulus, huge amount of liquidity being pumped into the market. And I think Apple now is going to suffer as a result of the contraction in liquidity, all the way down to around about $110 a share. Now, if you ask me my real hard opinion, I think Apple's going to fall to around about $70 a share, to be fair. But in the near term, I think we're talking about $70 a share, to be fair. So in the near term, $110, and then longer term, $70 a share. Let's look at Facebook. Facebook is going to go all the way down to $100 a share, in my opinion, and therefore it's a massive sell. Tesla, now I love Elon Musk. Let's be absolutely clear here. I'm not against Tesla, but I'm talking about where the high-tech sector is going to go, and Tesla is a high-tech, high-growth stock. It's a great, terrific share. However, in the short term, I do believe it's going to go down to 550 or even lower. That doesn't mean it's going to go in a straight line. It means there are trading days when it's going to bounce. But overall, I think in the next month, you're going to see Tesla around about 550. That's my call. That's the way it goes. Your opinion is obviously valued, and it's good that there's two-way opinions. What else have we got? We've got things like Netflix is an absolute sell. It's just going nowhere as far as Netflix is concerned. Bitcoin. Now, I've been calling Bitcoin down, and it's holding the 20,000 level. So 20,000 level, it's got massive support going all the way back to 2017. That's when the bulls came in and started buying Bitcoin. So I do believe it's going to go down to the $15,000 to $13,000 level, not in one straight foul swoop. But I think the trend on Bitcoin is down, and therefore you're probably better off to look and go short. MicroStrategy, which is quoted in the States on the Nasdaq, holds 129,000 coins, and the CEO there, Saylor, says that he's going to be looking to buy more as the price drops. Now, there is rumors that he's on a margin call, which means he's going to have to pump in lots of money, probably hundreds of millions of his balance sheet, in order to support his existing holding. Based on that rumor, I think he is on a margin call. They're just not admitting it, even though he denied it on CNBC. I think MicroStrategy is going to be in a margin call. It'll be interesting to see if they have to sell their holdings or pump in more cash to support the Bitcoin holding that they've got. So an interesting one, but I'm calling Bitcoin down to the 13,000, 15,000 level. I've been calling it down all the way from 68,000. So I think it's going to go all the way to 13 to 15,000, and the other cryptos are to follow. Looking at Twitter, wow, I just don't know what's going on there now, because I've always liked that Elon Musk is going to take over Twitter, but it's been to and froing, backwards and forwards, and I really don't know if he's going to go ahead at this stage or not. Anyhow, that's it. So I've passed my 6-7 minutes. You can catch me on daily updates on Instagram. You've got your YouTube. I will try to do another YouTube during the day. It's not always that simple doing driving markets, because spend a lot of money on petrol, and the cost of petrol is a fortune. Catch me on LinkedIn, on Twitter, Instagram, and obviously on YouTube. All right, Mayor Valensky, driving markets. Have a good day. Have a good weekend.